All right, I'm Ben Schiller from CoinDesk, publication in crypto, and I'm joined here by Yoni Assia from eToro. So just very quickly, what does eToro do?
eToro is the world's largest social investment network. We have 35 million registered users worldwide that can basically talk about the markets, open a brokerage account with us to trade stocks from 20 different capital markets, crypto assets, derivatives, options trading, and stocks now in New York as well. And on the network, you can actually see all of our customers' track record performance, and you can automatically copy the most successful investors on the platform.
Great. So we're going to talk about the evolution of the retail investor. I'm just interested in this kind of cultural and generational shift from older investors like us, I guess, to the kind of new Gen Y and Gen Z and even Gen A now. How are those kind of generational shifts playing in the behavior of retail investors today?
I think what we see is really a difference in risk appetite or appetite. I think like older generations, without generalizing too much, but thought of like dividend yield. Then we had like Gen X looking, or even baby boomers look at PE multiples. Then we're going to Gen X thinking about growth, and Gen Y with tech stocks and a bit of crypto, but thinking of how do I invest in companies I love and I love their products. And I think Gen Z is like, eventually Doge is going to be the currency in Mars, so why not buy Doge?
Well, that's what they say. So I'm interested in this kind of impact of crypto on investing generally. A number of aspects of crypto investors, like they do their own research, they tend to be less responsive to centralized authority, even journalists. How does that affect how traditional finance views these new types of investors, do you think?
So we've been in crypto since 2011 in eToro, and we're the first in Europe to launch Bitcoin in 2013. So this is now our sort of fourth crypto rally, hopefully going now into another super cycle. In 2017, we started the year with 2% of our customers owning crypto, and we ended with 90% of our customers trading crypto. So I think crypto is a generational asset class. I think most Gen Yers and Gen Zers want to own crypto. A lot of people want to own only crypto. They call me crypto conservative because I think it should be a part of your entire portfolio, which also include this old thing called stocks in the capital markets. But I think it's sort of a gateway trade. I think it's simply much easier for people to get into crypto instead of stocks. And we see like a lot of people on eToro who came to eToro to buy Bitcoin or Doge or ETH, and then gradually educating them to understand also the value of the stock markets and investing in companies and understanding how to learn about really managing a portfolio.
But the particular behavior of crypto investors and the attitude and the culture of crypto, how is that impacting behavior, would you say, day to day?
I think, again, it's all about like sort of risk-taking, and over time also people who made money by taking huge amounts of risks and making I just met a friend of mine with his kids, and he did 25% returns this year, and they're like, we did already 50, and then they started talking to me about crypto, and they're like, but we don't want to invest in Bitcoin because it's too slow. We want something that will go like 300, 400, 500% a year. And I think that risk appetite is changing market dynamics. I actually think what we've seen in 2021 with the meme stock rally is sort of it's bringing like the crypto risk appetite investors into the stock markets, and people taking that risk changes market dynamics, but it also provides liquidity for more riskier assets, smaller caps. So you have more volatility, more opportunity, but also more liquidity in those markets.
Right. And it's also said that retail investors in crypto are more likely to get their information from other investors rather than from centralized authorities like banks or like journalists. Do you think that will affect how investors move in the future, make decisions in the future?
Sure, but we've definitely seen in eToro that people rely sort of on information from others, right? That the purpose of looking at others, looking at their track records, etc. But I think now, retail investors are relying on the huge amounts of information out there on the internet, both for stocks and for crypto. I don't think a lot of retail investors are reading sort of old research reports of 40 pages on a stock from a bank, right? They're reading tweets and analysis on X or on StockTwits and reading reports from ChatGPT or an LLM researching for them what's happening in the stock.
Right. And I just wanted to ask you about the election and how that might affect how eToro does business here in the US with crypto. Is that going to open up your business to more retail investors here? Because I know you kind of took a step back as well a few years ago, and are you going to be coming back in now?
Sure. So I think we had a lot of sort of uncertainty on the crypto markets in the US. The vast majority of eToro's business is outside the US still. A huge presence in Europe and the UK, which actually already regulated crypto into financial regulation. And here, obviously, there was a lot of uncertainty, or even the opposite. There was clear certainty that the regime didn't want significant retail exposure into crypto, and I think that changes. I mean, I was with the audience when Trump was at Nashville, and I've never seen such a crypto-friendly, I'd say, environment from Musk doing a government agency called Doge to Howard Lutnick, to a lot of the people who surround now the new administration are very crypto savvy and crypto bullish.
I mean, that was an incredible event. I was there as well in the audience. To have a president or ex-president there with the Bitcoin people, it felt like history in the making, really. Talk about this notion of dumb money. People have talked kind of rather dismissively, particularly in crypto, this kind of dumb investor. Do you think that kind of retail investor is now smarter because he or she is more informed than they used to be? What do you think about this notion of the dumb money versus the smart money? Is that changing, do you think?
I think it's completely wrong. I think we see it on our platform. Our 3,200 popular investors that are being copied on eToro generate double-digit returns, and a lot of them beat the S&P 500 indices. When I show people track record of our top popular investor in eToro generated 29% returns average in a year for the past 10 years. So these are like hedge fund level returns of our top retail investors in the platform. I think this narrative is coming from the people who want to manage the retail's money and don't want them to manage their own money. I think it's very clear that with all of the information out there, retail investors can become successful investors by making decisions on their own or on eToro by copying others. And we see their track record over time, and they're getting better and better. So I definitely think to generate double-digit returns consistently over time is not simple, but it's doable for retail investors if they devote the time and attention.
So with the kind of democratization of information and tooling and AI, do you think we're going to see a sort of flattening out of the playing field there and the end of this notion of the retail investor on one side and the institutional investor on the other?
I think retail investors, with the tools and information that they're getting, and now AI is going to be a game changer in providing better tools, both from like an analysis point of view. You don't need 5 people with spreadsheets to analyze what's happening in financial statements. It's all real time. You can ask like specific KPIs comparison to the point where it's getting to become very effective. You can actually ask GPT, I want to invest in this sector, just give me a stock, what stock is better, and they'll provide very good answers. We're looking now at things that were historically very complicated, like options trading strategies, and how can you actually generate potential structures that historically were issued by banks for you to say, like, I want to do 20% a year yield from basically selling options, and I want to structure that over the next 4 years. Just give me the chain. I'll just give you here, click the trade. So I think, and those capabilities, in the past, you'd have to have like a room of analysts with software of structuring like a structured product. Suddenly, people who have, okay, something blew up. It's my product team. Like, no, stop. So I think all of the tools that used to be very difficult. Oh, that's one better. That used to be very difficult for retail investors to access, and large hedge funds were doing them. I think all of these tools are coming to retail investors. Just as an example, we're now launching a long-short smart portfolio in eToro, which is market neutral, right? So in the past, these were things that were available only to hedge funds, certain threshold, but now with our ability to use AI to actually generate the strategies of market neutral strategies, to update them every day, we can actually bring those type of products directly to consumers, and I think that significantly levels the playing field between retail investors and the most professional institutional investors and hedge funds in the world.
Just a couple more questions. So about particularly memes. So that's a big thing in crypto. People investing in meme coins or kind of meme entities. How do you feel the kind of the memification of finance is playing out in crypto, and how will that affect retail investing in the broader market, do you think?
So again, and I'm starting to feel old, as the oldest of Gen Y. I have to admit, I originally didn't get meme crypto at all. But what sort of led me into our first meme coin trading on eToro, which was Doge, was like, okay, if Elon Musk's behind this, it's interesting. And that was like, we launched, I think, a week before it was on Saturday Night Live, and we saw like, I think it was like huge amounts of volume of Doge that week. So I think it's interesting. It's, again, in my view, more from the point of view of the capital markets and long-term investing. I don't understand the value of meme coins, of Pepe and others. I do understand now Doge, because it's going to be the currency in Mars, but I don't understand Pepe yet, but maybe because I haven't read enough. But from a trading perspective, if you just think of the skill of a trader, which is something completely different than investing, or the way my son articulated to me, what's the problem? You just buy it when it's low, and you sell it when it's high, and you make money, and you do it again and again and again. And that's trading, right? Core trading. You can actually make money in sort of, zero-sum games, and some people have the talent to do it. Do I think it has long-term intrinsic value? I don't, or I don't understand most of it. Do people actually make money on it? Yes. Do other people on the other side probably also lose money for it? Yes, it's a zero-sum game, but that's the game of just speculative trading.
Right. I mean, people tend to be dismissive about meme coins. They say it's a fad. They say it's a freak show. They say they don't understand why these coins are making so much money. But do you think they will actually impact kind of more mainstream finance? Do you think, for instance, companies might put out memes in order to attract attention from investors like that?
I think everything happening in crypto is impacting the stock markets. We've had all of the large exchanges in the world, from NASDAQ to NICE to LSE, Euronext. Everybody wants the flow of retail investors. So crypto is a gateway trade, which I think is like 200, 300 million people trading crypto. They're learning how to trade, right? They're learning how to speculate about the markets. Some of that speculation can translate to logical long-term investments like digital gold as Bitcoin, and digital oil or natural gas with ETH and Solana. And some of it is just pure speculation, but you have that in the markets as well. You have penny stocks, and you have people who love to trade penny stocks, and that's a part of the market. But when such a huge amount of people around the world are learning how to trade, how to speculate, how to take risk, and sometimes the most important lesson early on when you start your life as a trader investor, learn how to lose money gracefully. I think all of that impacts the market, because a lot of them are going to move eventually from crypto to the stock markets, and they're going to take a lot of the lesson learned in crypto into the stock markets. Again, that's my view, although some of them are saying it's only crypto. But again, my view is eventually everything becomes digital assets, and once stocks trade 24/7 and are as easy and fun to trade as crypto, I think we'll see this entire generation shift to stocks as well. And again, it's going to bring a lot of liquidity, a lot of volatility, and in some aspects, a lot of like fun and interesting memes and stories to the market as well.
Excellent. Thank you very much. I think we're out of time. Perfect timing. Thank you, Yoni, and thank you, Benzinga.